Good afternoon, everyone. Ads here from Unity Trading Group. Welcome to your Monday update. Good to be back after the weekend. It was a pretty slow weekend for BTC. We'll have a quick look at that. But before I start, give us a like, give us a subscribe, and of course, tick the little bell to the right-hand side if you want to stay updated for all of our future content. You all being here means a lot to us. And of course, you can find our links down below, and of course, our website on the bottom left-hand side of the screen if you want to head over there and have a look at some of the brilliant guides and the indicators that we have to offer. But BTC, so we've been observing BTC since this movement to about 20K, and we've been observing BTC come down just ever so slowly. So we're looking at this volume indicator down below here that's been running to the downside for quite some time, since our movement from around about 20K all the way back down to about 18.1. So it's been an interesting run so far, and I've just drawn this in just before I jumped on this session, actually, before I jumped on this video, and we are moving into a corner, and of course we are sitting on top of it at the moment. So I've drawn this in with the help of the line chart. Of course, the line chart gives you only so much of the picture. We've got the movement here, and of course we are sitting on top of it now, but it doesn't really give us a decent area to draw this in from the bottom. So you can use the line chart in addition to the candlesticks to give you a decent area to draw your trend lines in, but just remember they are objective and they can be drawn 100 different ways, so don't put too much emphasis on those trend lines. But we are sitting on top of it. The thing that I'm looking for over the next little bit is the movement to the upside, and of course to give us some more market structure. And what I mean by this is we need to create some higher highs above previous structure to really confirm that we are going to head to the upside, because at the moment we haven't really been doing that. Since we dropped from around that 20K area back down to 18, we've just been observing BTC make lower highs and continue to the downside. So this area above the 786 Fibonacci trend-based fibs pretty much is crucial, and we have been hanging around this area for quite some time. So now that we've pretty much broken and closed above this, it's a good sign for BTC. However, the volume needs to follow. As Ty always says, and as we've said in the podcast previously, volume precedes price. And I've heard that being said by a number of people in the past, but it's really true. It's really true. So we need to really look at this volume indicator to start sweeping to the upside before we're going to see some price action towards that area again. And I'm more referring to that 20K psychological resistance area. We're going to need a lot more volume than what we currently have to even think about pushing through this level. And it is going to be the hardest level to push through, because it is that higher high. It is that 20K psychological resistance that we've been really referring to since 2017. So it's going to be the hardest one, and it's going to require the most volume. But for the short term, for the immediate term, if we do hold above this 786, I'd be looking towards this 9.5 area to really confirm that we are going to head back towards that 20K. So not jumping to any conclusions just yet. We are sitting on a level of resistance at the moment. If we draw in that horizontal ray, we've got that level of resistance sitting at here. We've had resistance here in the past, and of course we've got some liquidity to the left-hand side. That's why you probably find that BTC is hanging around this level at this current moment. So if we can break above this, give us some higher highs, and can confirm our movement to the upside, that'll be a good sign for BTC. And of course, hopefully some volume precedes that. If not, if we do start to move to the downside for BTC, as we have been so far, we can probably expect it to come down towards that 50 area. And of course, our most relevant level of demand is around that level, also around between the 50 and the 38.2 on this particular trend-based fibs that I've drawn in the chart. So an interesting one for BTC. Not a lot more to say. However, we have just been moving to the right-hand side, since the end of last week, since our Friday update. So over the next little bit is going to be interesting. And of course, Monday night, in terms of regulated markets, Monday night isn't the most volume, or doesn't bring the most volume. We could probably expect some more movements on a Tuesday, following into Friday. So we'll see what happens over the next little bit. Moving on to Ethereum, very, very similar situation, and I'll get rid of the last one that we had a look at on Friday. I haven't looked at it since then, admittedly, but this level of supply seems to be still relevant, and we're looking towards that 00 fibs, that 616 area, and of course this level of supply, is still relevant, and it probably more than likely still does have sellers at that level. So it's going to be a difficult one to get through. Probably not as difficult as it once was when we saw it back here in November, but still some sellers are expected there, and we're coming up to December and the December holidays. So it could be a while yet before we see some movement on BTC and Ethereum to really kick off the December holidays. However, we have seen fireworks, move across the last weeks of December, so we can always hang on to that fact and see if this does continue towards the upside. If it doesn't, however, I'll be looking towards this 38.2 at the 565 region, and of course our area here at our demand, most relevant demand inside that golden pocket, which is 550 to 535, between the 50 and the 61 Fibonacci. Moving on, having a look at the last one for the Monday night update, and the US dollar hasn't been faring well as of late. We did move through this level of demand late last week, and we have been just clearing that area since then. So what I did mention late last week on the Friday night update, I believe, we were forming the oversold area in the steamroller indicator, and of course you can find steamroller on our website. The website is down below on the left hand side. You'll find the indicators tab up the top of the website, and you can get your free 10-day trial on Steamroller if you like. But Steamroller has been pretty accurate on the DXY as of late in both directions, so I do put a little bit of weight on the Steamroller indicator for this, and we have seen that play out. So we've seen this relief happen for the DXY. If I draw the relevant Fibonacci areas in, one moment, where are we? Fib retracement, high to low. So we are retracing back up to the 38.2 at the moment as it stands, 90.86. And if we are to see this continue, and I think probably it will, we could probably expect it to have a look at the 50 and the 61. The 61 screams out a little bit more to me than the other levels, because we do have some support resistance flips at that area and some liquidity sitting at that area as well. So if we're to see the recovery continue on the DXY, I'd be looking at the 61.8. If we do decide not to break through that 38.2 and close above, then our most relevant level of demand is not far away at the 90.4 mark. So it's going to be one to look out for over the next couple of days, and of course we'll probably be looking towards Tuesday and Wednesday night for that to happen. But thank you all for joining me. Again, welcome to Unity Trading Group. If you're new, give us a like, give us a subscribe if you can, and we'll see you tomorrow night for our live session at 7:30 Melbourne time. That's AEDT time, 7:30 p.m. See you then.